Hey guys, thank you all so much for joining my course and completing it. I know that you all have learned a lot through these videos, and I know that it will definitely be a benefit to you all whenever you're trying to determine what stocks that you're looking to purchase. Okay. So I do want you guys to, do that every single time that you're looking to buy a stock. Use those indicators. It will help you know exactly what that stock is at currently, so you don't have to go through the agonizing pain of buying something at the wrong time at a high price and then having to deal with the consequences later. Yes, there is times where stocks are running up and you feel like you're missing out, but patience is a virtue, and you guys should have patience when you're investing, and you should give it some time, and take your time with it. And if you're so eager to invest into something, maybe get a dividend stock, maybe get into an index fund, because things will ultimately come back down to earth. They may not get back down to the same price you were looking at it, but again, that's what the indicator's for. Because I'm in the same situation as a lot of you guys. I bought a lot of stocks during this COVID related crisis, right? And I've been waiting for these stocks to kind of drop down to the same price I wanted. I mean, of course, I've been buying stocks. Now, don't get me wrong, but I've been waiting for some of the ones that I bought to drop down subconsciously to what I've initially purchased it at. But I realized this is a one in a life. That was a one in like a lifetime event almost, and it's not going to just happen like that. Stocks are just not going to drop to that price again like that. So that's why using these indicators will help you, even though you may be buying above the price that you're thinking, or you bought before. These indicators will save you a lot of time. It'll save you a lot of losses. Because yes, there's stocks that I bought that was like literally like more than half off. Like, it's most likely not going to get to that point again unless there's something else major that happens, right? So the best bet for individuals would be to use the moving average indicator and seeing, oh, is this stock finally at its 100-day moving average? If so, okay, maybe I'll buy it. I'll think about buying it instead of just looking at it, run up and buy it, right? And not understand where it's at, or where the price it's at, using the Bollinger Band to determine, is it touching that upper Bollinger Band, right? Is it touching that, right? If it's touching that, maybe you want to not buy it yet and just wait till it drops, or if you see the stock, it's at its lower Bollinger Band, and you're like, okay, this is a good company. This is a company that I like. Why I should probably buy here, and buy a lot if possible. Use it a moving average to see that as well. Buy a lot, right, if possible, and just wait till it runs up. If you want to sell it after a couple of days, a couple months, weeks, whatever, you can. If you want to keep it, which I suggest, keep it. You can use RSI to let you know if a stock is getting overbought or oversold. If you see a stock that is going up to 73, upwards to almost 80, or even 60, above like 50, that means that the stock is trading upwards. There's a lot of people buying it, increasing the trading volume, increasing the price of the stock, and that is maybe something that you want to wait on, right? You don't want to buy it at that time, because stocks will go down. They may not go down to the price point you saw it before, but they will go down. They will touch their 50-day moving average, and they will touch their 100-day moving average, and they will touch even their 200 and even lower. Yes, they will. So just do your due diligence, please, and use all these indicators. Use the VIX to let you know, oh, the market is not going to do well today. The VIX it's at like 40, right? Or it's at like 30, 40. That means the overall market is doing bad, is crashing, right? It's at 40. Or, oh, it's at 20. That means the market is good. It's everybody's calm. It's lackadaisical. There's no volatility, right? Use that and you guys will be set. I do want to give you guys something before you head out, and that would be this place called 1stock1.com. You guys can see it up here, 1stock1.com. And it's really not really technical, but I just like it, and I feel like it will help you guys a lot. You can type in at the Google sign up here, whatever stock that you're interested in, right? So let's say I'm going to do Intel. You can type in Intel, and then it'll just press search, and it'll take me here, and I'll click Intel, and then I'll be able to see the trading history of Intel from 1975 till about 2019, and see that they show me the entire trading history of most stocks. It may not be all, some that are new aren't on here, and some other ones may not be, but most stocks are on here. So I like to use it so I can see what happened like during this time with this stock, right? As you can see with Intel, they generally do pretty well. They do have some red times you can see, and you can count how many red times they have and how many times that aren't red, and see if that's something that you're okay with, right? And it'll show you the beginning price, like that year, like what price that the stock started that year, the ending price, the gain or loss, or and the percent gain or loss, right? So you can the gain or loss is the monetary, right? So gain or loss means like cash. Percent is the percentage. So you can do that, guys. And it helps a lot because you can see if it on a red on a red year, you can see how long it took that stock to get back to its good, good price point. So you can see stuff like that. So if it was at, like, let's see. So Intel in the 2000s, it started off at $82. If you would have bought Intel in 2000, see, this is why stocks are risky, right? This is why they can be risky, and this is why I'm telling you guys to use those indicators to help you with your fundamentals. And the technical will help you with your fundamentals. Yes, so use the technicals and use your fundamentals, and then you guys will be set, right? There will be a tumultuous time. There will be some rocky times, but you'll be more prepared than a lot of other individuals. So, as you guys can see, in 2000, it was at $82. If you would have bought it at $82, guess what price it went to that, and what it ended at that price that year, right? So it ended off at $60 that year. The price of it, that's where it closed, 60. So you lost $22, negative 22, and that's 26% that you lost, right? It did do a stock split. Yeah, it did a stock split, I think in 2000. So you can see that too. The 2000 ending price for Intel has been adjusted for a 2-in-1 stock split. So never mind. It did a stock split. So that's why it starts off at $30 in 2001, and you gained. But then, in 2002, if you would have got it at that price, it's down to $15, right? So that's 50% that it dropped. It dropped 50%, right, in 2002. And let's see how long it took to get back to $31. Let's say if you buy it at $31, right? Okay, it came back up the following year. Yeah, it came back up the following year. Yeah, that's nice. But let's see. Let's see. If you'd have bought it at 24. I'm trying to give you guys. Well, Intel doesn't do bad, actually. They're okay. Doesn't do too bad, but that year 2000 really cut into the profit. So did year 2002. But if you would have bought $31, you would have been, like, in 2003, you would have been fine. And then, yeah, it dropped again in 2004. But oh, never mind. I'm looking at it all wrong. It dropped again in 2004. Wow. So if you got it at $32 in 2000, no, $31 in 2002, every single year after that, it's never closed. Oh, well, never mind. It closed to 30. Okay, so let's say you bought it at 32, 2004, right? Every year after that, it never closed higher than 30. It never ended the year higher than $32 until in 2004 until 2014. Oh, that's ridiculous. That's crazy. So yeah. So just know it can take that long, right? It can really take that long. So yeah, just be careful. I like to use this, guys. It's a great website, great place. You can go in here so you can see stock performance guide. It just shows you if you would have bought a stock. Let's look at Apple, right? It's always the one that everybody. So if you would have bought a stock, if you would have invested 5,000 at the stock, it's just giving you dates that if you would have invested 5,000, what price like what's your what value you would have today? Like what's your total value you would have with that $5,000 investment, right? So it starts off at the IPO of the stock, so it would be 1985 for Apple, I believe, right? Yeah, yeah, it would have been at 1985, which is interesting. So if you'd have bought some shares of for 5,000, you would have 3 million right now in 2019. If you would have, let's go to 2000. So in 2000, if you had invested 5,000 in Apple, right, got about 44 shares, right, or so, give or take. In 2019, right, you would have four 422, yeah, $422,000. Yep. So $422,000. That's what you would have. And yeah, so that's pretty amazing, right? So it took about 20 years for you to get, just a $5,000 investment. You netted $422,000. So just letting you guys know that what you can do with investing and just the magnitude of it, right? Just stay patient. Just use what I taught you guys, and you'll do just fine. Thank you all for joining my course. I really appreciate it. And I will be coming out with more content that will help you guys along as well in other aspects of investing. Thank you again, and goodbye.